Well, good afternoon, everyone. Welcome along. It's a very chilly afternoon here, but bright in Notting Hill Gate. The US market has just opened a few minutes ago, and because of my schedule, I have to do this early in the session. So, as we can see, if I get that back to last night's date, that's today, and the short-term trend on VectorVest in the US is up. The underlying trend is up, and the longest-term measure of the trend is up. So markets are moving up. I keep saying to the VectorVest regulars that if you want to make money, then 70% of the exercise is being in sync with the general market. And certainly the spread bets that I've got running at the moment are all in the money. Very little to do with me because the general market has been rising. The S&P up 15 points on the day, sitting around that incredibly important number, clearly, of about 4,000. So early in the day, the only reality is the trend at the moment, and at the moment, the trend is up. If I have a look at the VectorVest market timing chart, that's the market timing chart, folks. This is the VectorVest composite of all of the shares that we follow in North America, sorry, in the US, should I say, 8,000 odd stocks. And as you can see, quite a positive chart from a price action point of view, because we seem to have made the first rising bottom in a very long time. So as you can see, markets are making falling tops and falling bottoms, and it's made its first rising bottom. Now, the market timing methodology that I use is called the DEW, and that's the last DEW buy signal, which occurred on a few days ago. In fact, the market would seem to have broken through this trend line, and with any luck, we're at least going to get this little bit repeated. I did a bit of crystal ball gazing yesterday at the VectorVest weekly Q&A, but so far so good. And classic charting would say that at least this bit needs to be repeated, and that would take us a tad up the page. So steady as she goes, that could in fact last into the first quarter. So I have some spread bets running. I'll try and go through them now. That's the first 15 minutes of the day. I haven't taken any trades today intraday yet. Let it settle for the first 15 minutes. Although I have quite a busy schedule today, so we'll see how we go. There were some good trades in this. That was particularly good the day before yesterday. And I think I got a little bit out of that one yesterday as well, but stopped out on most of the position and gave it up after that. So let's see what happens there. On the market itself, if I go to the bets, these are all spread bets in the UK, and I've got four of them. The GDX I've been holding for a very long time. The XLE is just a few days old. So if you have a look at these, there's some common threads in these. As you can see, they're all in buy recommendations apart from the XLE. So let's just chart those. And this is my standard chart, folks. And if I put on earnings per share, this is just a magic indicator, because if earnings per share is rising, companies making more money than it did last year, well, the city buys it. It's simple as that. So my standard setup is a run which I find quite difficult to predict. And as you can see, earnings came in here and somebody got a sniff of them and it gapped out of this range. Very difficult to know that in advance unless you're close to the action. I've never heard of this company before this big move, but one of the scans on VectorVest found this big move. So I like to see a 30 to 50% break. And that break should happen in reasonable volume. And as you can see, look at this big volume up. That's a good sign. And then it goes sideways in this triangle. And that can be frustrating. And that tends to last from about, sometimes they break up after 2 weeks. Sometimes it takes 8 to 10 weeks. 8 to 13 weeks, should I say. It goes into this triangle. Some people call it volatility contraction pattern. the more complicated you make it, probably the more you can sell your book for. But very interestingly, on this particular stock, when I see a stock breaking down through an obvious support level and then reversing, that is a form of spring made famous by a trading hero of mine of 100 years ago called Richard Wyckoff. And I bought into that thing just there. And I ran it before Christmas got out and bought back into it a few days ago. Still going quite nicely. If we have a look at the action here, it seems to be running into some form of little triangle in there, if you were to look at that on a daily chart. So I'm holding that. And the target, folks, going back and forward here, I know that's 5 to 15, so that's a $10 target, and I would be grabbing at that if it gets up around 20 or so. So that's looking quite good. Now this is CAT, and again we look at CAT. This big break that I, as primarily a technician, would never find. Maybe the value people would find something down there. And if you look at a 5-year chart, there was some support down there from a fib level as well. My 2 moving averages are moving up, and you can see this is rising on good volume in here. And again, if we draw in my flag pole, we can see that that is the flag pole, and then it goes sideways. Markets like to go sideways into the moving average, and that should be 55. Where that 40 comes, I really don't know. 40 is quite useful on a weekly chart, so that's where it's come from. That should be 55. Likes to go into this zone between the 21 and the 55, and it charts 1, 2, 3, 4, and 5. Maybe I've taken a bit of poetic license there, and then breaks. Now, the really important thing is you see earnings per share is rising, and if a market goes sideways and earnings per share is rising, it's my observation over the last 12 years of using VectorVest that it tends to break up quite nicely, and I'm holding that. There's a big target in this. I think this has been driven by that 500 billion, I believe, infrastructural package, which may or may not get through the Senate. I don't understand American politics much, but that's looking, it's going the right way. My stop's at entry, so I can't complain. Now, this is the GDX, and I was nearly taking profits in the GDX. Now, the GDX is a different setup. The GDX is, in fact, a setup on the weekly chart, and there's no earnings on this because it's an exchange-traded fund. And volume doesn't make that much sense, but this is a contrarian pattern known as a Gartley pattern, and it's I think that the setup that I showed previously is my number one setup: a run and then a sideways move in a triangle, in a flag, etc., and then another breakup. That's the easiest money that you can have, but every now and then you see these Gartleys setting up, and you can get in right at support. So I'm holding that. My stomach and numbers tell me that the gold market looks short-term overbought, but it's still hanging in there, so I'm still holding on to that. And then the last one is this XLE. If we go to a yearly chart, well, you can see the same thing happening again, and maybe I put again a little bit of poetic license onto that flag, but I traded this bit, and as you can see, there's a beautiful triangle here. And see how the market went back and kissed that. Now, this is another interesting point, folks. If you see a market breaking and then coming back and kissing pretty much to the tick, then you know darn well that there's some very smart money there. Smart, not because they know what's going to happen next, but smart because they have calculated a level and they buy in at that level with a tight stop loss. If it goes their way, they make a fortune. If it doesn't go their way, they make a small loss. Asymmetrical risk to reward ratio is the key to the exercise. So I bought into that somewhere down around where my cursor is. If you can see it, I'll draw it here. Somewhere around there. And I announced that not last Monday, but the Monday before in the VectorVest Q&A, and it's moving up quite nicely there. So again, I'm going to bring the stop loss entry in that today. So that's my efforts. There's nothing very, very complicated. Maybe the Gartley setup is more difficult than this setup because this setup is trend following, and clearly there's a big target around these highs. And clearly, XLE will be dominated by the oil price, which is starting to look, in my humble opinion, quite good at the moment for another run up towards 100 level. Like everything else trading related, time will tell. So don't make the damn thing too difficult, folks. You're looking for a trend, and a breakup on good volume. Okay, let's put the volume in here. See volume coming in there nicely in that run up. Make that a bit smaller so we can see. As I say, on VectorVest, I can actually do a search for a 30 to 50% move up, and I can also do a search 30 to 50% move up on rising volume, and I can also do a search 30 to 50% moving up on rising volume and rising earnings, and that's where you find some great spread bets. There is the earnings per share. And what we've done, which is common to everything in VectorVest, is that I've tried to integrate the technicals, the study of trends and turning points, with the fundamentals, i.e. very strong growing earnings, and this upgrade in earnings, this step increase in earnings, and then we go into a sideways pattern, and in the sideways pattern, volume moves down, and then all of a sudden, as you can see, volume starts to move back up again as it does its best to start to break. It was being accumulated there in advance of the breakout. Traders would rather die than chase, so when it breaks, they bid it where this resistance becomes support, and away it goes. So not that difficult, and I probably made more over. I've been trading for 40 years. I think I've made more loot out of that one simple setup than anything else I've ever done. So it gives you an entry point, a high probability entry with the trend, and it gives you a target by using what technicians require. We'll discuss a measured move. You can also use Fibonacci for targets, but that flagpole produces a very good target again. And when you actually add in the fundamentals, this earnings per share, plus all the other VectorVest metrics that I haven't got time to mention, you can push your hit rate up, and very importantly, push your risk to reward up to produce a high probability system. So I hope you found that useful. As I say, 70% of the exercise is the overall market. The overall market's doing its best to break up today above that 4,000 level. Then we can make another 100 points very quickly indeed. The darn thing has been sitting in this range now for quite a long time, between 3-8. That's a 15-minute chart. Let's look at a 3-month chart. And you can see that it's been sitting in this range now for quite a few days. So it is short-term overbought, but there can still be more legs in it yet. And the only reality is the trend. The trend today is up. Time will tell. All of my stops are at break even. Thanks very much indeed. Bye-bye.